Good afternoon, everyone. Thank you so much for taking the time to have a listen into our third installment of our masterclass webinar series. This one's about Forex and how all of that works, what type of market we have out there. And I think it's a very interesting thing to talk about firstly. I think it's a very popular thing to go through with regards to where the country is now, where the rand is at now. And I mean, to not talk to a specialist can often be quite a detrimental thing. So this is the reason why we got Mike Jeenes of Currency Partners, a senior FX dealer, there to come have a chat with us, give a bit of insight into how the process works, what are the costs involved, how does this work in regards to overseas investing, and how almost anyone can make benefit of using different currencies in their portfolio without too much backing from that side. So without further ado, I would like to ask him one question to start off with. We have quite a few lined up here that a lot of people have thoughts about in the industry, but the first one, and it's very relevant right now, is Mike, what is going on at the rand? How did this pullback happen?
I kind of knew that was going to be the first question. Hi there, guys. Thanks for the introduction, Tom. I mean, interesting day of all days, one of the most exciting days we've seen in some time with regards to the rand. Just looking sort of over the last couple of days, going from all the way, 1750 to where we're kind of trading now. Market, if you look on my screen, you can see it's about 1697. And, it's just a couple of things have sort of aligned over the last couple of days. If I'll just run you through a couple of things that have taken place. First of all, just overall, we've got a really weak dollar as of late. I mean, if you think about how that kind of translates, market's been very well. The just sort of general overall market's been very good, and the data's been great. So the dollar is a safe haven. So when everything's going wrong, everyone flocks to the dollar. But when things start to look a little better, everyone sort of starts selling the dollar and moving into more emerging markets and riskier assets and things like that. So we've got a weak dollar. We've also seen PMI data that's come out globally yesterday and also locally yesterday, which was surprisingly good. So a nice uptick there in PMI data, which is the Purchasing Managers Index. It's just sort of a manufacturing metric that everyone looks at. Then yesterday we also saw Pfizer, in fact, had their initial release of their human trials. The vaccine that everyone's working on. Pfizer's got their own one, and theirs is particularly promising because it builds antibodies and the like. And their initial results are positive. So the market's obviously liking that. So that's very risk on for everyone. Then in terms of sort of data today, our current account came out today. And the current account, it's a surplus today. So in terms of consensus or what the market expected, they were actually expecting a deficit, and we've seen a nice surplus. And that just means that our exports are actually more than our imports. So we're seeing that we're more exporting than importing for the first quarter, which is, again, you can, just intuitively, getting more in, exporting more in. That's great for our country. We don't want to be reliant on countries offshore, etc. Technically, if you look at the chart that we're seeing here, we've had a bit of a breakout. So this is what you'd call an ascending channel. We've actually broken to the downside. So technically, this looks fantastic, and that's why we've also seen a bit of momentum and follow through. And that's kind of why we're seeing, at least from our perspective, why we're seeing rates down here.
I mean, that's very interesting. All those things seem to have coincided very nicely for the rand against the dollar, and yeah. I'm sure as an FX company, you guys must have been enjoying that from a business perspective. But
yeah,
talking about taking,
sorry,
yeah.
No, sorry. So I was just going to say, just to add to that, yeah, 100%. I mean, we've had a lot of clients that have been waiting at these kind of levels, and when it comes, they pounce, and they pounce in droves. So yeah, it's been a busy day.
That makes a lot of sense. So thank you again for taking the time to have the chat with us. But Mike, I mean, very importantly for people on this call, one of the most important questions they have is, how does the process of taking money out of the country actually work? And also, how much can you take from that perspective?
Okay. I think from that perspective, let's just maybe talk about the allowances. So there's actually 3 allowances. I mean, two in particular that we'll talk about. The third I'll just mention briefly. The first that most of you may have heard of is what's called your single discretionary allowance. So this is a calendar year or annual allowance. Each and every South African is given 1 million rand in allowance that they are allowed to externalize each and every year. So that's each and every year, calendar year. The things that are included in that allowance are things like, taking funds offshore to your offshore account, and offshore subscriptions, card swipes offshore, travel allowances, that's included. And also, if you purchase something off Amazon, for example, that'll go towards that single discretionary allowance. So it's difficult to keep track of that if you use different banks and things like that. So often you should just keep a mental note. From our perspective, when you do trade with us, we do keep a log of what you take offshore through us, but barring that, it's very difficult to keep track otherwise. I don't know what you're doing with subscriptions and things like that. So that's your single discretionary allowance. The second allowance is something called the FIA, or your foreign investment allowance. This allowance is different in the sense of it's up to 10 million rand that you can apply for. So it's not given to you, but you can apply for it. The application and what's required is called, or that what's given to you once the approval comes through, is called a foreign tax clearance certificate. How it differs to a single discretionary allowance is that the application itself, you can only apply for what you prove you have. What I mean by that is, if you've, say, got 100,000 Rand in your bank account, that would be savings that we would make the application for, and you could apply for 100,000 Rand for the foreign investment allowance. Once the approval comes through, and there's a couple of documents that's required, from our side or SARS side, you can make the application through your accountant or on eSARS filing yourself. It is a little more onerous, but it can be done. Otherwise, you can, we do offer it as a complimentary service from our side. That's the reason for that. I talked about single discretionary allowance being able to use travel and subscriptions and things like that. With the foreign investment allowance, it's different. It's only for investment. So sending funds to investments that your advisor has given to you, that you guys have discussed, or to sending to your own account offshore, but it can't be used for things like travel and the like. So those are those two. The third one that I'll briefly touch on is what's called a special allowance. So that's for anything over and above 10 million Rand. So, if you're selling a company or something like that, and you've got excess capital in terms over and above the 10 million Rand, we can then apply for what's called a special clearance. And yeah, those are the 3 allowances. Then how we actually take the funds offshore. Everyone's got a bank account pretty much. So you guys can either go to your bank. We all know how easy that is to do. Just getting a simple request is often difficult, but you can go through your bank to get foreign exchange. It is obviously a lot more expensive going through them, depending on your relationship. And it's often a lot more hassle. You can otherwise come through to someone or an FX provider such as Currency Partners. It's simply a case of registering online with us. Everything that we do is paperless. So, you don't need to print or scan or anything like that. We open up either an Investec or a mercantile account, depending on your preference. And once the account's open, you get a personal FX dealer that's assigned to you. You can have a chat. I am obviously one of those personal FX dealers. So you would either chat to myself or one of my colleagues. And then we get down to it. We have a chat, look at your requirements. When are you looking to take funds offshore? How urgently do you need to take the funds offshore? And then when you're ready, we go ahead and trade for you at the rate that you're happy with. And we send the funds off to your offshore account. It's as simple as that. The next thing you know, your funds are offshore in your offshore account. And simple as that, guys, from our side.
Thanks, Mike. That makes a lot of sense, and I can actually attest to the fact that you guys are very streamlined in your process. Having gone through the process a few times, it's amazing how you guys do everything online compared to some companies we've worked with. Maybe give us a little bit of an idea as to why kind of currency partners and FX companies exist compared to just using banks. What value do you guys bring?
Yeah, sure. Okay. Yeah, sure. Okay. So you know, there's always, I mean, again, going back to the banks, they do fulfill an absolute necessary function. The problem is that they have many functions, and FX is not a huge one. It's specifically for private clients. I mean, corporate clients they obviously take a lot of care of and all that, but specific to private clients, that function's not really there, and it is there, but it's difficult. The process is just generally difficult. So, you know, companies like us, like currency partners and other intermediaries, we do, you know, we fill that gap. We fill the gap that's otherwise complex. It's frustrating and it's expensive. You know, we only deal in FX, guys. We only deal in foreign exchange. So that's all we're going to talk about. And everything related to FX, we're not going to loan you money or, you know, open up an account that you know need a bank account, etc. Sorry, a bank card and things like that. We're only dealing in foreign exchange, so we get to hone on those kind of skills for you, specifically what you're looking for. Like I said, it's convenient. You get your own dealer. We do all the paperwork for you. If there's a regulation that you aren't aware of, I promise you we are. And then, of course, the cost saving. Banks are typically a lot more expensive.
That actually ties up to my next point, Mike. Sorry, which is
sure.
What are the kind of different spreads compared to banks? Can you give us an idea of what the actual numbers are?
Yeah, sure. So I think let me break it down first and foremost for those that aren't aware how sort of quotes and things work. In foreign exchange, you get something called an interbank reference rate. So if you are looking at my screen now, you know, I mean, just look at the top left here. This figure here is essentially the interbank, or close enough to the FX interbank rate. So that's the interbank rate where all the big banks are trading their billions and all that between themselves on the Thomson Reuters interbank network. So that's what all FX intermediaries and banks base their quotes on, at that rate. So just so you can sort of educate yourselves a little, and I can educate you and just empower you, next time you are looking for a quote. What happens is every company adds on a margin or a markup to this rate. For example, if you go to a bank, you may be on this rate, you may be quoted at, I don't know, 1730 or something like that, or higher, 1740, whatever it may be. Whereas if you come to a place like Currency Partners, that'll be significantly less, dependent on the size that you're trading, the frequency that you're trading, but it will be significantly less is the point. So, that's the whole reason why we exist and why we still exist today, is because we are saving you money, hard money. So, we typically save clients about 1% to 2% on the margin itself, depending on what bank you deal with. The margin is, make no mistake, the most important for a client looking to save money. It's not the layer of fees that the banks talk about, where, the commissions or the transaction fees. It is the margin itself. The second fee that the other charge that we do charge is what is called the transaction fee. And again, this is relatively minor in relation to the margin. The transaction fees that we charge are either 250 Rand or 450 Rand versus a bank who will charge you, say, 250 Rand to 1,000 Rand. Now, the reason why I reference two particular amounts, 250 Rand or 450 Rand, is because there's two different options as to how you can send funds. One is called shared. It's SHA. Shared means when we send the funds, the banks essentially share the fees along the way. So they all take fees along their way. So, for example, if we send $10,000 to an offshore account, you'll probably only get $9,970 on that side, because, believe it or not, there's actually 4 banks involved in any one SWIFT transaction. There's a remitting bank, a remitting bank's corresponding bank, a receiving bank's corresponding bank, and a receiving bank. So it's pretty unbelievable, and we all know banks, they love to take fees. The other option is called the R option. It's 450 Rand, and we take all the fees upfront. So, for example, if we trade through Investec, we'll take all the fees upfront. So, if we send $10,000, you will get $10,000 on your side. So, just a couple of things to be aware of and the differences between us and the banks, but we do like transparency, guys, just so you're aware. If you do have any questions after this, I'm happy to obviously take them with regards to margin and things like that, but just empower yourself to always ask the questions what you're being charged.
100%. I mean, that also ties in nicely to the next question. Is obviously we now know what it costs, where the layers of fees are, but how do you time taking funds out of South Africa? How do you know when is the right time and the right rate to go across that? I know it's an extremely hard question, but I look forward to your answer.
Yeah. So it's a difficult question in that the answer is broad and the question is broad, but it's a great question. You know, a lot of the time it's going to be dependent on your time horizon. How urgently do you need to take funds offshore? And also, the reason for the transfer. Why are you taking funds offshore? Are you taking funds offshore because your advisor believes you should, increase your diversification out of South Africa and you should be investing in equities in the US or wherever it may be? From that side, you obviously need to take into account not only the Rand, but also, what equities are, valuations and things are doing offshore. So it's tough. But from our side, we do like to have that chat with our clients, and you should always be taking into account what's happening now. For a client that's looking to take off funds, if I was to chat to a client kind of today, or even if it was yesterday, yesterday we did have this breakout move here. So, from a technical perspective, we were looking great, and based on fundamentals, we were looking great with all the news that I mentioned earlier. So the chances are that there was a good chance that we were going to see these levels. Even if we were sort of trading up here, in the 17 still, I would still implore clients to look to at least take a portion out. You never know how long these moves are going to be out for, whether it's going to continue. But if someone has, for example, 500,000 to do, and we haven't seen these rates in some time, and they've only got a couple of days to make this decision, more than anything, I'm here to protect my clients and to make sure they get the most that they can. So I would implore them to at least take a tranche offshore now, and if they're looking to just have something a little lower down for the rest of their portion, to sort of chat to them and say, listen, technically, we are looking great. There is a chance that we get down to sort of this measured move, and I'll chat about that a little later, this measured move between sort of 1670 and 1690. But, to have an order somewhere around there just to take advantage of the move, because it's great seeing these moves like this, great seeing these moves, but if you don't do anything about it, it's just, it's just the chart. You haven't taken advantage at all. So just to be aware of. The other thing to do is in terms of timing, given that markets in the short term are difficult to call, they're inherently difficult to call. I would often suggest, and just for guys doing this themselves, always have a mental note of where you're looking to trade, or have a discussion with your dealer where you would ideally look to trade, and also where you'd ideally not like to trade. The worst kind of rate that you'd be happy to achieve. There is an order that we do have for this. It's called an OCO, which is a one cancels the other order, whereby, and I'll use an example here, a client says, if we're trading at where we are now, a client says, listen, Mike, I see we've bounced off here, but I'd love to sort of, if we get down there again, I'd love to take off, just say 100,000 Rand. So what we'd do is we'd put an order here at 1690, and then we'd also put an order, again, if he says to me, I'd like an order at 1690, but I also don't want to take too much pain above 17. Then we'd put an order here at 1690, and we'd also put an order here at 17. It's called a stop order. A stop order essentially means, if it gets to this level, just trade. And that way, at least you locked in, and you're getting sort of the benefit of this move down here. Sure, you're not getting the best rate, the 1690, but you're still getting a great rate relative to where we've been in the market. So that's something you can do. Like I said, in the short term, it is difficult to call, guys. We do whatever we can. We have some tricks up our sleeve, but it is difficult to call. So the best we can do is manage your money as best as we can, and come up with a strategy that you're satisfied with, and that's how we go about it.
100%. I mean, that obviously gives a lot of people a bit more peace of mind and a bit more comfort. To jump through to a different question, one that I've got written down here is obviously another very hard one to read, but where is the USD ZAR going from here?
Okay, so from our perspective, where the Rand goes to from here is, look, I know we've had some good news recently and it's all looking fantastic, and I'm going to zoom out in a sec just so I can give you a little bit of context. But from our perspective, we think, based on this measured move, upside for the Rand is down at sort of 1670. We're not quite convinced we'll see these sort of 1630 lows that we previously saw. Just based on everything that we know, and talking about debt to GDP. Again, we'll get to that a little later potentially, but from our perspective, around these levels, we would be telling clients anywhere under 17, there's value down here. There's value down here, and we think that clients, even if they're looking to take, half of what the allocation that they're looking to take off for the year, we suggest sort of around anywhere under 17 to sort of 1670. You are getting value, and we'd be happy because we don't think there's too much more in it from our side, at least in the short term, and at least given what we know going forward. We do think there is value here, and ultimately, we think there will be weakness from around these levels if we do test up to sort of 1750 again, and potentially up to 1780. Again, that is a bold statement because most of the market is saying, we're going to be down at sort of, 1550. I think that's far too bold to call. We're way too early in the coronavirus recovery, and we don't quite know the permanent damage as yet, among other things. And just, why I have kind of just minimized here, given you the bigger picture, is that don't forget this is where we've come from, guys. We've gone from sort of, it's nice 1390, but the trend for now remains up just based on this. This is a healthy pullback. We did break out of this, and again, I'll get into technicals at some point if you guys are interested, but we have broken out of this consolidation. The measured move was hit up at 1650, and we went a little more lower than that. But the ultimate thing to keep in your mind is don't forget where we've come from. We've pulled back nicely, but that doesn't mean we're going to unwind this entire position. From our perspective, fundamentally and technically, we do think ultimately we're nearing the end, at least in the short term, and we'll probably see a move to sort of between 1750 and 1780. So we're happy telling clients that we're happy if they're taking funds off, at least considering it around here. But again, it's our opinion. The market doesn't care what we think, so just bear that in mind. We can certainly be wrong.
Just second last question. Yeah, I know we're running out of time. Why is the Rand the most liquid emerging market currency? Why is it so volatile, I guess?
So the Rand is liquid for a couple of reasons. I suppose the most important one to remember is that South Africa's got its problems, and there's issues all around. Not all's lost, but we have a fantastically well capitalized financial system. We have one of the best in the world. From obviously our central banks and our banks themselves, we are very well capitalized. So it's easy to get money in and out of South Africa. We've got like I say, a well-established banking system, and we're often used as a proxy for other emerging markets and African nations. Trying to get money into other African nations, it's obviously tough. So they use South Africa as a conduit and as a proxy for getting funds across Africa and other emerging markets. But again, the main reason, we are very well capitalized. So there's lots of players in the market making it nice and liquid, but often making it very volatile. Quite right. So yeah.
That's very interesting. Well, let me ask you one last question before we wrap up. And this is obviously a question I'll be asking all of our attendees or our hosts on that side is, Mike, if you had 1 million Rand right now surplus to all your requirements in your life, what would you do with it?
So that's a tough question, because I'm probably going to give you my answer and not the answer that you may be not looking for, but what other clients would, I mean, you've probably spoken to your clients about, risk aversion and things, like that. How much risk a person's willing to take, regardless of surplus capital, etc. I'm pretty risk averse myself, in the sense of sort of shorter term investments, although I'm probably far less risk averse than some other people. What I would do, I trade in my capacity as an individual. So from my side, I would be looking for opportunities. I'm currently on the sidelines for a couple of things. Mine, for example, my offshore portfolios, obviously I'm invested in that, and both locally. But in terms of excess cash and capital I look for opportunities all the time. And I think a market like this is fantastic for opportunities. I mean, I can reference one recently, is, of course, everyone knows about it, is Sasol. Obviously I took part in the Sasol rise as well. I didn't quite get as much as probably a lot of other guys got, but that was one that I'd been waiting for some time. And there are hundreds out there, guys. I mean, there are so many opportunities, but you have to be patient. And at the moment, I'm being patient. So I don't see too much out there in terms of what I'm looking for personally, but I am looking. And I would suggest, through chatting to Tom and Alfonso or whoever, finding those opportunities, because believe me, they are there. They just take a bit of time to wait. And if things start turning around again, with coronavirus and equity markets sell off, or whatever the case may be, you will find opportunities. And that's, of course, why you have guys like Tom and Alfonso.
100%. The right answer was invested with Carrick, Mike. So well done.
That's perfect.
So I think that's a wrap up. Thank you all for coming in, listening to Mike. I honestly think you answered those questions very, very well. I just wish we had more time to ask more questions. I'm sure it helped everyone understand the Forex market a lot better and how the process worked. So thank you very much, first of all.
Yeah, perfect.
Thanks. So also just be aware that next week we've got a new webinar as well, which covers structuring in the offshore space, looking at how to minimize your investment growth and the tax liability on your investment growth. The main speaker will be Etienne Bosch from Old Mutual International. Very, very well in his field and a lot of experience. So please, I hope to see you all there. And yeah, thank you once again for coming, everyone.
Thanks a lot, guys. Appreciate it.